So I've got a question for you. What do you get when you mix a government shutdown, a pro-stimulus prime minister, and Bitcoin at record highs? Well, the answer, you get a market that looks like they've had one too many espressos and can't decide whether to rally or rest. So before you place your next trade, watch this. Welcome to your daily market brief, where we break down what's moving markets and why it matters. Minus the noise, minus the hype, and yes, with just the right amount of caffeine. My name is Francois. I am your market analyst here at ATFX Africa, and let's jump straight into the markets, kicking things off with USD JPY. So if you've blinked, you might have missed it, but the yen just hit a 2-month low after the leader of Japan's new ruling party sealed her position as the next prime minister. And spoiler alert, she's a fiscal dove. And no, that's not a bird species. It simply means she's in favor of more government spending and looser monetary policy. That combo has traders expecting Japan to keep money tabs open, which naturally sent the yen tumbling towards 150.5 per dollar. The irony, even as the yen weakens, household spending in Japan actually rose by 2.3% in August, thanks to government support measures trying to offset US tariff pressure. Meanwhile, Bank of Japan Governor Ueda reminded markets that rate hikes are still on the table if growth and inflation stays on track. But that's a big if. Kind of like me saying, I'll stop drinking coffee. Not gonna happen. Technically speaking, USD JPY remains pinned around that 151 zone, which has historically been a psychological ceiling for traders. A clean break above 151 could tempt buyers to test 151.5, but if the Bank of Japan steps in with any verbal intervention, we could see a quick retreat towards 149. For now, traders are playing a game of chicken between fiscal stimulus and central bank discipline. And so far, the stimulus side is winning. Moving over to cryptocurrencies, Bitcoin has been acting like that one kid who doesn't follow the rules, soaring while everything else hesitates. It hits new all-time highs above $125,000, boosted by strong institutional demand, fresh ETF inflows, and oddly enough, the ongoing US government shutdown. Yes, while Washington is on pause, Bitcoin's been running at full speed. ETF inflows last week hit 3.25 billion US dollars, proving once again that crypto investors are treating Bitcoin like a safe haven for uncertainty. Adding fuel to the fire, rate cut expectations are rising, with markets nearly fully pricing in 2 additional rate cuts before year end. Combine that with a softer dollar, and it's no wonder that Bitcoin's been flexing its digital muscles. On the technical side, Bitcoin is hovering around 124,500, with that 126,000 zone acting as potential resistance. A short-term pullback wouldn't surprise anyone. Even rockets need to refuel. But if bulls keep momentum above 125,200, the path to 127,000 remains open. For now, Bitcoin's message to the market seems clear. Shutdown or not, I'm still running the show. Let's finish things off with equities. So the Dow Jones cooled slightly, slipping about 0.1% to around 46,600. Even as the Nasdaq and S&P 500 hit fresh record highs. Tech stocks once again stole the spotlight, with AMD jumping nearly 24% after sealing a major AI chip deal with OpenAI. That kind of move makes even Bitcoin blush. But it wasn't all sunshine. The ongoing US government shutdown continues to cloud investor sentiment. Essentially, data, like the non-farm payrolls report, that has been delayed, leaving traders, well, flying blind when it comes to assessing the health of the US economy. Add into the mix Fed speakers this week and Jerome Powell's upcoming remarks, and you've got a market trading water until it gets a clear read on rate direction. Technically, the Dow remains range-bound between 46,200, which is the support, and 47,000, which is the resistance. A sustained break below 46,200 could open the door to 45,800, while a strong bounce above 47,000 might just set us up for another attempt at those record highs. But for now, sentiment feels like a tug of war between AI euphoria and, well, shutdown fatigue. So here's the question. Will the yen's weakness spark a broader carry trade wave? Will Bitcoin cool off or double down on its rally? And most importantly, will Washington finally reopen before the market loses patience? Well, we'll have to wait and see. And with that, we wrap up your daily market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.